Hi, Tony here from PPA, one of the directors, keeping it real. Today we're going to talk about a particular city that's becoming very hot, a hotspot for property investment. We're going to look at why and how do we know it's becoming one of the hottest locations in Australia to invest in, but it's just coming out of a property correction cycle and into an upswing. So let's have a look at a property clock that a lot of you might be familiar with this. If you're not, number 6 is the bottom of the cycle. Number 12 means it's peaking and it's the top of the cycle. So predominantly you don't want to buy here, downswing. You want to buy in the upswing, and predominantly from 6 to 9, right? Unfortunately, most people buy up here, 10 to 11, too late. This is where you want to be, 7 or 8, right? So let's go over here. Where you want to be is here, at the bottom of the cycle, so you get that full upswing. But most Australians, unfortunately, and one of the biggest mistakes and the reasons they fail is they buy over here. And if we look, it goes up for a short time and down, just like Sydney's done if you bought in the last 12 or 18 months. It goes up for a while and now it's coming off and correcting. Not a lot of growth if we look at a 5-year plan. You need to be here where you've got 5 years of growth. But how do you know that this is the bottom? Well, we need to know it's come off the bottom wherever we're looking to invest, and this particular city has, and it's showing huge growth drivers at the moment, huge signs of uplift over a period of years. And what are those things we look for? Well, we look for uplift from government, we look for uplift from the private sector, we look for uplift from infrastructure, right? We look for uplift from defence. We look for uplift from tourism. And I could go on and on, guys. I could go on for ages, but we need to have multiple growth drivers, multiple industries, all spending billions. All these, right, are spending billions of dollars on creating jobs, billions of dollars on projects, infrastructure, major development, creating major jobs. And I'm talking jobs in the thousands, perhaps 10,000s in the coming years, right? What do you think that's going to do for housing and the housing need? It's going to drive the housing need through the roof. Yet you get all this upswing, right? Capital growth, because we know demand's going to get higher and higher and higher. So very sustainable over a long period of time, maximising your growth potential. And not only that, you're getting in at the bottom. You're buying at the cheapest price. You're an astute investor. You need to understand these basic fundamentals. Most Australians don't, and this is why they get it wrong. This particular city has billions and billions of dollars in multiple industries, like I've said. You need to understand that. You need to be where this is. One of our astute investors, and I'll just tell you one story quickly, recently purchased a house land, a duplex, house land property for nearly 800,000, expected, and it's in an absolute crack of a location near a university, near a hospital, and near defence. So perfect for sustainable capital growth and jobs. But not better than that, the returns expected from rent, anywhere between $1,300 and $1,800 a week. So that's going to be somewhere between 9 and 12% return. That is incredible. All right, and that's one of many stories in this particular city. It's red hot. It's just coming off the bottom. Now is the perfect time. You need to get in and understand why. Okay, if you want to know more, give us a call at our head office, 02 61 62 1506. That's 02 61 62 1506. Or visit our website, www.ppa